Thank you all so much for coming out for today's panel. My name's Irene. I am a venture partner at Bain Crypto. I've been building the space for several years, most recently as head of strategy at Layer Zero Labs. I've had the pleasure of working with Anil's fund, Delphi, but through this panel we'll be talking about each of these funds, also just more the craft of VC as it's specific to crypto venture. So to kick it off, I'd love for each of you to give a brief introduction to your fund, also your specific mandate within the fund. We'll start with you.
Sure. Hey guys, my name is Akshat. I'm head of investments for Maelstrom, which is the family office of Arthur Hayes. Pretty standard family office mandate, make money.
Great.
I'm Franklin B., general partner at Pantera Capital. A little bit about Pantera. We've been investing in blockchain and crypto since 2013, launched the first institutional Bitcoin fund in the US, and from there, we've grown a portfolio of venture and early stage token investments of around 240 plus. So a lot of the early leaders in things like stable coins, exchanges, DeFi. We continue to invest. We manage about $4.5 billion today. For myself personally, I spend a lot of time on DeFi and infrastructure, and have also led most of our gaming investments.
Very cool.
Hey everyone, my name is Anil. I'm the CEO of Delphi Digital. We have three main arms: research, ventures, and labs. Obviously today we'll be talking mostly about ventures. On the venture side, it's all prop cap, so we get a lot of flexibility. We do liquid and private, but mostly lean private. And we're kind of very flexible in what we invest in.
I think one thing that people often take for granted about venture and understanding it is that different fund structures actually then translate into very different approaches to deals. What's attractive, what's not, and what is actually fund returning. Each of you guys have slightly different structures. There's a hybrid fund in the mix, a liquid fund, only privates, early stage. Could you talk a little bit about how your specific fund size and structure actually translates into deals in this cycle that may or may not be a fit?
Yeah, I'm happy to go first. I think for us, we really feel like the full spectrum of opportunities within just crypto as an asset class, blockchain as a technology, is how we want to approach the space, right? I mean, when we talk to LPs and institutional investors, oftentimes where they're coming to us from is, hey, I am excited about where blockchain technology is going. I don't have a strong view on whether I should be in liquid tokens or venture, and I don't know the best way to sort of set up my portfolio. I just want a great active manager who's going to figure it out for me. And so that's the way we've really designed our last venture style fund, built for the next 10 years. Same thing we're doing for our next fund too, which we're launching in 2025. And so what that fund has is venture equity, early stage bets in things that are building on top of blockchain or facilitating access to crypto assets. It has early stage tokens where we get to invest at the early stages and help bootstrap some of these early protocols and networks. It has liquid tokens where we still see a lot of great opportunities, things that look like they're still at the seed or Series A stage, but because a token is so important to the success of what they're building, they're already out in the liquid markets. And then finally, on top of all that, we actually have a new bucket that we've just built out over the last 12 months and that we're adding to our next fund, which is what we call special opportunities. And these are things that just don't fit into any of the buckets. It's just the nature of navigating the unknown in crypto. And so that includes things like our investment in the Ton ecosystem and Solana, backing Bitwise on their launch of the Bitcoin ETF. Things that don't fit any of those buckets, but because of how we're set up within the ecosystem, we get to bring those kinds of opportunities to our partners.
How about you, Akshat, at Maelstrom, originally a family office? How do you guys think about what is actually fund returning and interesting for you guys?
Yeah, I think, so Maelstrom is structured as a family office, so we don't have any outside LPs, no outside investors. And as a result, we have a lot of flexibility with the mandate. There's a lot of different things we can do in terms of structuring deals. So often, a lot of our deals are pre-sale investments in very early stage companies, but there'll be times where we also invest in like an annuity, a stream of revenue royalties associated with a project that we might help out in an advisory capacity. We can also do things in the liquid markets. We've also done a lot of secondaries where we've bought stakes from other investors. I think the flexible mandate also allows us to feel no pressure to deploy because we don't have any investors, who are kind of waiting for the money in 5 years. Arthur is waiting for his money, but he's bullish on this sector for the next, decade, century. So we only invest in deals when we feel like we find good quality stuff. And at the moment, for example, we're slowing down a little bit.
Anything you want to add there?
Yeah, I'd say Delphi's in like a similar camp, just because it's our own money, and the way that Delphi is structured is pretty unique. Essentially, we have these 3 divisions, so what we call like the hive mind. Essentially, you get this analytical perspective via research, the builder's mindset via labs, and then the investor's mindset via ventures. And so the only ways people can invest in the Delphi fund is basically working at one of these 3 divisions. So because of that, everyone's incentivized to kind of bring deals and alpha from kind of like every perspective and every kind of walk of the space. So this leads to, very, very similar, like a lot of unique, different opportunities at all stages of the life cycle.
You actually bring up an interesting point around building funds that offer different value add to portfolio companies. I often get asked by founders, is it just commoditized capital? Am I effectively just choosing which VC I like the most, and how should I build my cap table? How do you guys think about this? Is your fund selling commoditized capital, or what actually differentiates having Maelstrom, Delphi, or Pantera on the cap table?
Yeah, I can maybe start. It's something that we thought a lot about. When we first started, our main objective was actually being the most value-add fund in crypto. And we spent a lot of resources, and we quickly realized that the bar was very low, right?
Yeah.
So a lot of funds weren't doing much other than being capital. And for most projects, it's kind of okay. They can kind of reach out, get intros and everything like that, and kind of handle most of that themselves. At Delphi, we've kind of structured it. We obviously do have this big like consulting advising division where we do a lot of token design. We have a big design division that does like UX and branding for a lot of protocols. And then on the lab side, we have a lot of builders who, if we do really feel like the need, will help kind of like build certain protocols or ecosystems out for investments that we're really bullish on and excited about. So, it's definitely been something that we've always been focused on. And I think over time, what we've seen is a lot of funds that are launching nowadays kind of are way more brutally honest and, don't try and pretend that they are value add. Mm-hmm. Just say, hey, we're just capital. And you know what? A lot of projects seem to be okay with that.
Interesting. You too?
Yeah, I think we see it similarly, that we're, like the crypto industry has evolved in early days, like you said. There was a time where VC funds were some 50% Bitcoin, Ethereum, and then, just kind of allocating almost like index funds. Nowadays, funds have to specialize. And you're starting to see that, like they're funds that focus just on Solana deals, or funds that focus just on high throughput chains. In our case, we do a lot of DeFi stuff. We also do some infrastructure stuff. But what makes us unique is that we help with storytelling, because that's what Arthur is good at, in kind of highbrow ways and through his essays, as well as in kind of Neanderthal ways and in the fun ways that he tweets. So I think, our mandate is to, yes, make money, but also to help tell stories and be part of those stories. So I think that's why portfolio companies come to us and like working with us.
Franklin, Pantera's first fund was a Bitcoin fund, I think in 2013 or 2014. And now you guys are on Fund 4.
Fund 4, yeah.
Fund 4. You guys could have just stayed with Bitcoin, and some people could argue that if a fund never ventures into trying to catch founders at the earliest stages, their returns would be far higher across the board. On average, VCs don't actually return. Why is it that you guys wanted to expand into early stage protocols?
Yeah, I think for us, I think there's such a bigger opportunity to actually just leverage blockchain. We could have just said, hey, Bitcoin is the best idea that we have, but we had more ideas. And, I think the energy and creativity from founders just kind of forces you into that position where, I think there's kind of a bunch of things that still need to happen for us to realize the full potential of blockchain and crypto. We kind of put it into 3 categories. The first one is around gateways. Bitcoin could have just done its thing for a long time and stayed pretty flat. But by opening up new bridges and new ways to onboard people onto crypto financial rails, that's really opened up the opportunity for Bitcoin to serve as a means of payment, for Ethereum to really enable a whole universe of application development, and then from there, really to become a much more scalable platform for creativity. And so, early stage protocols for us is just a natural evolution where, we want to see experimentation. And, we know that there's some things that are really unique about what blockchains can offer. Global 24/7 rails, decentralized marketplaces, empowering creators to really own their entire stack and own their fate. Applying those into different verticals and different industries, to us, is a multi-billion-dollar opportunity. It's massive asymmetric upside. And so when we think about the nature of venture, that's exactly what we should be playing for, right? And to your last question, too, of how we think about, why founders should partner with us, right? It's not just because we were early. It's also because, we've learned a lot from those 11 years, from multiple bull and bear market cycles, and all those battle scars are really just to the benefit of our founders. So, the few things that we think really matter to building a great company, building a great ecosystem, are really just around 3 key areas. It's talent, it's go-to-market, and it's research. So we've built ourselves around those things, and we try to really walk the walk, right? One thing we put out was something that we've kind of internally called our proof of work system for a long time. And that is literally a tracker of every single thing that we are helping our founders with. So over the past 2 years, it's been something like almost 2,000 introductions to potential customers and partners. It's a ton of talent referrals. And so, being able to go back to a founder and say, look, you chose us as your partner.
These are our KPIs. Yeah.
This is exactly what we're doing for you. Hold us accountable. And hopefully 5 years from now, you can say and really point at the numbers and say, this is where Pantera helped us. So, we're trying to be more public about it now because we've got this great data. But really, we just want to continue it for the next 10 years.
Supporting founders, I think, plays a very important role in the outcomes of certain projects. I can attest to that, having been on the protocol side and now on the venture side. I think another important aspect of venture is actually returning the fund, like making money. And so oftentimes people see XYZ fund raise $1 billion, and that's incredibly exciting and also a lot of pressure. You now have to actually return 1 billion plus. And so my question for you guys is, what is actually fund returning right now? What have you learned from the last few cycles? In the case of Pantera, you guys have had multiple funds, so you have legitimate learnings on the books. You guys are on fund 2 or fund 3, I believe, though you've been in the space for a long time. And then Akshat, Arthur, of course, has wisdom from the earliest days, and you've been there to bootstrap this fund. What's fund returning right now?
Yeah, throw out some thoughts here. I think one key way to make sure that your fund returns is creative structuring, kind of what we were talking about earlier. So, for example, sometimes there are deals where we believe in the project, we believe the project and the protocol will make money. Now the question is, will value actually accrue to the token, and that too in a timely fashion within our cycle? And if we feel like we need insurance against that, sometimes we negotiate things that are kind of borrowed from like the chaotic world of lower middle market private equity or traditional VC. So it's things like cash flow sweeps or royalties on revenues, things like that, where there are additional insurance policies against the token not accruing value quickly enough before the cycle ends. So I think structuring is one thing that a lot of crypto VCs, you're starting to see more of it, and I think founders are going to see crypto VCs asking for more on that front in the future.
Yeah, if I had to boil down how we think about it today, I would say it's 4 words. It's doubling down on winners. That's how you truly return a fund and truly realize, I think, ultimately, the value of your conviction and the partnerships that you have with your LPs. So what does that mean? Well, number one, you've got to pick winners, and that's not easy. But I think it's an important thing to keep in mind is when you're investing in the early stages, you need to pick teams that really have that ceiling of being able to be the winner in their sector, in their thesis, in what they're building and what they're solving for. Because if really the alternative that you're doing is picking a sector and picking a thesis and being okay with a top 3, a top 5 team, then you're really losing the massive upside that comes from being really the market leader. And so every time I think we're talking to a team and we're figuring out, hey, do we have conviction that they can go and win the whole thing? That needs to be there on day one. The second piece is actually seeing your winners win, right? What does it mean what does it look like really when a team is starting to win, right? Are they gaining real traction? When you talk to customers, do they really love and need the product? When you talk to developers, why are they choosing to build in that particular ecosystem over another? Is it for grants? Is it for the free money? Is it for the free attention? Or is it because they can build something that they can't build anywhere else, right? And so pulling the signal out of all of that noise, out of conferences like this, is the real challenge to be able to say, okay, they are winning. And so when you see that, that's when you can focus on that inflection point, double down, and say, look, let's give you the real rocket fuel to go and take over. And really, truly kind of push to the next level. And that all goes back into fund returns, right? If you can go from the seed stage where the hit rate is really low, the survival rate is really low, the upside can be massive, and then go to the Series A stage and say, okay, well, now we're actually starting to see where the winners are. There's still a ton of asymmetric upside, but now we can really choose, and we can really double down and be high conviction on where we're investing. That's how you get from, sort of that 1x to 3x, kind of hoping for that to hopefully that 10 to 15x that you want to do for your fund.
Yeah, and I'd say at Delphi, we're very thesis driven, obviously, very focused on the research, very coming up with exactly what we're investing in and why we think this will, have a lasting impact. There are a lot of things that we see that, we think will, go up, but, especially as VCs, you have, years on lock. So you want to make sure that you are investing in exactly what you're saying, like the, market leader that's going to have staying power. So it's something that, in your negotiations and talking to the team, really questioning their assumptions, because I think a lot of teams, especially right now, are very focused on just building a narrative and not really building products. I think, working with teams that are very focused on more so products that, will have narratives rather than backwards is really important.
Yeah, a different fund structure would lend itself much better to projects that pump and then crash, not venture. And sometimes you see funds, I think, that ride those waves as well. Another observation of mine, having been on both sides, is that the projects which at least I consider to be enduring, and then also the projects I consider to be less so, could often be determined as such based off of some of the qualities of the founding team. It's very hard to diligence founders in the earliest stages. Sometimes you get to meet them in person if you're lucky. Sometimes it's just a few calls. Maybe you meet them at a conference like this. Across each of your guys' verticals or areas of interest, maybe there's a thematic interest. I heard one of you guys say DeepIn earlier, one of you guys say DeFi. What are those signs of the right DNA fit, and how do you actually diligence for that?
Yeah, I'd say for us, at Delphi, we have around, a little under 100 people across the 3 divisions. So we have a lot of people built with different subject matter expertise in kind of every sector. So what's cool is if we are talking to a founder and they're able to teach, who we consider a subject matter expert within Delphi something, that's kind of a huge signal. 2, I think, crypto is obviously, getting bigger by, every day, but it is still a very small space, right? So it's very easy to kind of get referrals and, know who's worked with who and seeing who's kind of has that, animal kind of founder mode mentality. So I think that's been a really key part, but also At Delphi, we're probably one of the slower funds as far as like our investment cycles go. So, we always have at least a 2-week kind of period, which I know, in traditional venture is, short. But obviously when it's a bull market, these cycles go, to days. But the way that it usually works is, our ventures team, who obviously have an incentive to, get the deal passed, will bring in the deal, kind of like educate the partners, myself, and the team as a whole on it. And then weeks 2, we bring the founder in, and basically the research team, who has really no incentive to get that passed, other than just making sure that the fund that they're invested in makes money, will kind of like pick apart that founder and that team. So it becomes kind of like an internal debate, and sometimes founders can't stand that ground, and when they do, is usually a bullish sign.
Interesting. You too. Anything else you want to add there?
Yeah, I mean, I think understanding founders is the whole game, right? I mean, you could not spend too much time on diligencing a founder ever, right? And really just spending time with them, understanding how they think. It's just so important because ultimately they're the leaders. They're the ones you're betting on. And so the way I've kind of developed my own thinking around founder DNA, what's the right fit, what does each kind of vertical within crypto call for? The best way is probably to just talk about it through examples, right? So, if you're building an exchange, what are you building, right? You're building an engine to go and really just onboard thousands, hopefully millions of consumers. And that takes an army. So can this founder build an army? Can this founder operationalize an army and get them to all move in one direction, right? I mean, you can look at Brian Armstrong, you can look at Jesse Powell as kind of models of this. I really think of Danielle Vogel, who's the CEO of Bitso, which is really the leading exchange for crypto assets in Latin America, right? I mean, they're dominant in Mexico, they're entering Brazil, Argentina, Colombia. And so when you meet someone like him, you get to understand, okay, this person is obsessed with the customer, right? He's not looking to clone Coinbase. He's looking to understand what people on the ground actually want. So when you go to Bitso's website, you see, hey, this doesn't look anything like Coinbase. And that's because there's a real understanding of, okay, what are the products people actually want? And how do we meet them?
He's a strong point of view, informed by time with users.
Exactly. But that's different from like a protocol, right? That's building for developers, building a community, and hopefully has, a ton of technical rigor behind it. So you might be looking for someone who's got that strong technical background, but then also has the EQ and kind of that visionary kind of DNA that can get a community to sort of come together, but still be really credible with developers. And so, the kind of DNA and market and product fit is really something we think about a lot. When you get it wrong, it's really hard to fix. And when you get it right, it just feels right from day one all the way to when they're a massive success.
Founder market fit is essential. And it's why I also, if I were selecting a cap table, would want to ensure that my investors who are actually value add are high EQ themselves, because then they can better understand the markets and different personalities involved in moving business forward in a particular category. And I think for myself, when I was hiring at Layer Zero, I often included in a JD like bonus points if you've had experience playing a high performance sport or in a high pressure environment like a high frequency trading firm. I've spent the first half of my life training to be a professional athlete, and so I sometimes look for the traits that you otherwise would see in the very best athletes, which include emotion regulation, self-awareness, like extreme intensity and desire to improve, things like this. But across different categories, there are other types of things, like ability to hire great engineers. If you're the founder of like a high throughput chain, something like that. Anything you want to add there, Akshat?
Yeah, I mean, I would echo the point on passion and motivation. But the one thing I would say that matters most to us, and I assume also you guys, is integrity. There's so many parts of the business that are impacted by the founder's integrity, and that's hiring, that's dealing with future investors, it's dealing with our customers.
Security exploits.
Security.
Like this, yeah.
There's also almost no governance in a crypto company, typically, from a legal standpoint. So integrity is definitely everything.
It's also, I think, a huge advantage for both founders and investors, how much they can decompress the time they get to diligence you as a person. So there are some funds who have gotten to know founders over 6 years. Like they just ran into each other on the street in San Francisco, or they have built companies together in Hong Kong. So when the time comes and they have a product and they're fundraising for it, that integrity check is already there. When it's compressed around 3 days in a bull market, like you said, and you usually have a 2-week process, that's where mistakes start to happen, I think. And I'm curious for you guys, over the last year and a half, some people said we had a bull market. Some people said it's just like a local bull. What was that like investing in that environment? Did you guys have to bend the strategies you normally employ to stay competitive? Or did you learn anything new from some mistakes that were made?
Yeah, go ahead.
Yeah, I mean, I think in the depths of the bear market, or sort of the post FTX, post Silicon Valley Bank kind of year of crisis that we had, I think the challenge was really to look back at the history of crypto markets and say, look, this is the time to invest. Like these are the times when the best investments are made. So in practice, what does that look like? It looks like dragging yourself out of bed, even though you aren't feeling great about the market, and saying, look, let's go to work.
You just got liquidated last night. Yeah, let's invest.
Not us, but maybe others. But yeah, I mean, it really was a ton of devastation, a ton of crisis management with founders and putting out fires. But in the middle of all of that is really just looking into the different corners of the crypto ecosystem and saying, okay, who's still building? What's interesting? And that's always been the case, where great builders don't care what's really happening in the broader markets, because they're laser focused on a problem and solving it. And so for us, one of the things that's been really special about that period is we've been able to be what I think of as sort of like the investor of last resort almost, because we saw this exit of these growth stage crossover hedge funds, like won't say specific names, but you can probably think of them, that have left the space. And that's given us an opportunity to really be active on the secondaries markets, right? They're exiting, they're letting go of their positions that we think are true winners, we think are going to be massive in 10 years. And so we get to come in and say, look, we have a vision for where this company is going. We want to be a part of it. And we get to pick up the pieces really of that partnership that they had, and become, in the case of something like Bitso, we're now the largest shareholder of Bitso.
Very cool.
That we built up over that past year, because we're so excited about what's happening in Latin America, right? And that's something that only became possible during that kind of time of crisis.
So there's some waiting and leaping towards an opportunity when the markets were down. I'm curious from you two, how did your funds handle the frenzy of this local bull market? And I can say personally, even when I was still on the protocol operator side, the deal flow was suffocating. It was overwhelming. Yeah. And it took a lot of discipline, I think, from a lot of my from a lot of my VC friends, to not just sign DocuSigns straight from Telegram.
Yeah.
How did you guys handle that?
I'd echo a lot of these thoughts, where I think bear market investing is like way easier, obviously.
Yeah.
And, especially for us, we're very deep in the space. We're, constantly on the pulse. So we never really do leave like some of the investors, do. So it's always easier to have that conviction. I'd say in bull market, both sides, yes, investing is really hard, but also, working with founders is actually just as hard, especially in, the frenzy we saw earlier this year, where it was mostly around meme coins, right? I think, we had a lot of founders that we were backing for years, like, Jito and stuff like that have been building for years, and then see people, get rich off like a dog with hat, in like a few weeks, right? So I think that dichotomy was very kind of like interesting to navigate, and working with founders on that. As far as investing, yeah, like I think, Delphi is not, solid to it either. Like we definitely, get trigger happy during a bull too, and like our minds kind of expand and say, yeah, everything, this is up only forever. So yeah, there are definitely deals that we like ape in the bull, but I think, having that minimum 2-week process definitely has helped us in the past of, straying away from some duds. Yeah.
And how about you guys? With a family office mandate, you don't have to necessarily run through more bureaucracy internally.
Yeah.
How did you guys invest during that time?
So we started investing during a bear market, kind of. It was the end of 2022. Was when we started doing deals, but we picked up a lot of our investments in like the first half of 23. And as things picked up from there, valuation started shooting up. We decided to keep valuation discipline. So, if a project comes to us and says, hey, we've got an idea, it's worth $40 million, or we have a project that's like, we've got a prototype that's worth $200 million in terms of FTV. With some exceptions, generally, our stance was it's probably not worth that. We almost never paid the full price. So we'd always negotiate down, because the logic was, if you're going to throw a crazy number at us, we're going to throw one back at you. So we stuck to that and are happy that we did.
As we're coming up on time, I am curious to hear across your investing careers, perhaps what you were doing before as well. You bootstrapping a new fund, and then for you two being veterans, perhaps fundraising for new funds. What are the key hard-won lessons, meaning not from a Twitter thread, but learned through investment that exited or some that didn't, that you're taking with you for the next 12 months? A hard-won lesson.
Yeah, I mean, I think for us, it's been operational rigor has been one real lesson from, call it the post-FTX period. It was a really dark period for the industry, but I think one of the worst things about it was just the collateral damage to a lot of startups that ultimately weren't thinking about counterparty risk, custodial risk, weren't thinking about how to take care of their balance sheet and the runway that they had worked so hard to build. One thing we took away from that is we actually need to share a lot of the knowledge and process that we have for ourselves as a fund, and really share that freely with all of our founders, and whether they're in our portfolio or not, but really to say, look, this is not the kind of thing that should force a startup to fail. Fail because the market wasn't there, fail because you didn't build the perfect product, but don't fail because you chose the wrong place to store your money and just interact with counterparties. We built out a really good playbook for that, just really saying, hey, look, this is how we do things. This is how we recommend you do things, how you manage your treasury, how you manage even, when in the cases where you need to do something on an exchange, how you manage your time on exchange. Like literally get that down to 10 seconds. There's no reason you should have funds anywhere else besides an account that you control. And that's how we manage our fund. That's why, we were able to kind of dodge a lot of the impact, and hopefully that protects everybody else. The other piece too is just resiliency. Like that week when we saw Silvergate, Signature, Silicon Valley Bank all go down, it was a really, I would say, heartbreaking time that people were worrying about how to pay their employees because of things totally out of their control, but also really validating for us because we had spent so much time talking to every single bank that could be possibly friendly to crypto companies, because we saw in the previous years, every once in a while, a founder would call us up and say, hey, I woke up on a Monday morning and got frozen out of my bank accounts. What do I do now? And so we started just doing this thing where, that week when all that went down, we had 5 banks to call literally that minute to say, hey, look, we're ready for you guys now. We have 20, 30, 40 companies that need to move their money somewhere else so that they can pay their employees. And so that preparation to just say, hey, look, there's no such thing as too much paranoia, is hopefully going to help people just succeed at a higher rate.
I can so appreciate the many hard-won lessons from all of us that week that FTX collapsed and the wreckage that it left. I remember exactly where I was when I first saw the sort of rumors of a collapse on Twitter. How about you, Anil? You have many years under your belt. What is a hard-won lesson you're taking with you over the next year?
Definitely. Yeah, I'd say like the other side of that is just as important, like unwavering conviction in the space, right? I think for, a lot of people right now, I think crypto is like really good at constantly thinking about all the negative catalysts that are coming up. And I think what crypto is really bad at is expecting the positive surprises that happen, right? So, at Delphi, for example, we were really close to the Axie team for years, obviously helped design the token, work with them. And, even in our models and kind of like our bullish thesis, basically our most bullish case for Axie in the year of 2021, when it was like the year of Axie, their worst day was better than our most bullish case.
Wow.
So even us who were the closest to the team, working with them day in and day out, we expected kind of like the positive externalities. And I think, a lot of people in the space constantly will say, when is crypto ever going to deliver anything? What are we working for? What are we doing, et cetera? I think it really underappreciates what we've already built, which is these, parallel financial system that, basically allows you an option outside of governments, right? And I think that alone is kind of crazy to me. And what's amazing is, people, constantly say crypto is early, and of course it is, but I really think that the internet itself is, early in its infant stages. So when you kind of take a step back and think about, I think all of us on this panel are going to be here for decades to come. We have no thoughts of leaving or anything like that. And I think, when you're on crypto Twitter, doom scrolling and everything like that, it's really helpful to kind of take a step back, go touch some grass and realize that this is going to take a while, but what we're working on is super important.
I love that. Akshat?
Biggest lesson. So Maelstrom is a pretty new fund. We've been around for a year and a half-ish. And when we started, it was basically Arthur and me, and now we have a team of 6. And I think what we've learned in that initial phase is that our fund is basically, it's our money times the quality of our people. And I think, who you bring into the team and who you allow to associate with your brand, who interfaces with every single counterparty that your business deals with is everything, especially in these early stages where we don't have a brand. We didn't have a brand when we started. It was just, when we mentioned Maelstrom at conferences, no one had heard of it. And we're getting there. We're building a brand, but it's because of the quality of our people, I think, that we made it this far.
Thank you for that. We have about 2 minutes left. For each of you, what is your wish list project, wish list founder? If there was a project or a problem you really wanted someone to tackle, what would that be?
Yeah, I'd say one intersection that all 3 divisions of Delphi is very focused on right now is AI and crypto. And we really think that, AI is obviously in its earliest stages, and we think it's really important that we think crypto and AI are kind of like a perfect marriage, and both kind of need each other to not be kept by the gatekeepers, and it basically become exactly what Web 2 became with Fang. So, on the lab side, we just launched an accelerator with Near. So we're building and helping build a lot of these projects. On the venture side, we've invested in a lot of projects as well. On the research side, we've dropped a lot of great reports. Shout out Pondering. I know he's somewhere over here too. And I think basically that's an intersection we're super excited about. Another intersection I'd say is gaming has been something that we're always bullish on. We were just talking about that as well. We always knew it was going to take long, and obviously it's, I think a lot of people on crypto Twitter expect it not to ever come back or anything like that. I'm really excited for the next, I'd say 9 to 12 months. I think you're going to see a lot of these games that, funds like ours invested in back in 2021, 2022 actually come to market, and all it takes is 1 or 2 to onboard millions of people into crypto. So yeah, I'm really excited about, both of those. And then deep-in's probably an area that I'd say Delphi definitely isn't, as deep as I'd want us to be in, but it's definitely an area that we're really excited about and are very curious about. So any founders in any of those areas, feel free to reach out on Twitter.
Wonderful. Very briefly, you two, dream project, problem to solve for a founder.
Yeah, I would say 2 problems. One is that the total market cap of crypto today is $2 trillion. There's $500 trillion of assets still sitting off chain to onboard. So we need to do that, and we need to grow the pie. So anybody working on that problem, I'd love to chat with. The second is on the consumer side. Anyone building something that can get people to spend 60 minutes a week on chain, something I want to learn about.
Fantastic.
Okay. I'd like to see the first buyout of a traditional entity in an old world industry. So for example, in the farming sector, I'd love to see the blockchain organize a bunch of small farmers to acquire a large corporate farmer, stuff like that from in the old world industries.
Amazing. Thank you three so much. This was wonderful, and thank you all for listening.